So now we have Dr. Abdullah. So we are very excited to have him join us on the stage. A significant focus of Dr. Adam's research has been the need for monetary and financial reform. Dr. Abdullah is the head of the Department of Research at the College of Postgraduate Studies at College of Economics and Management, Al Qasimiya University in the Emirates Sharjah in the UAE. Dr. Abdullah is the recipient of the 2023 AQU Distinguished Academic Research Award. Dr. Abdullah obtained his doctorate from Malaysia, Terengganu. Dr. Adam has published 75 articles and books on Islamic economics and finance. Please welcome Dr. Adam Abdullah.
Bismillah ar-Rahman ar-Rahim. My dear brothers and sisters, Assalamu alaikum wa rahmatullahi wa barakatuh. And thank you very much to the organizers, to Guidance College for allowing me to present my research on re-examining money, debt, and Islamic banking in the United States. The reason why I did this is that because most people feel that fiat money, debt, and Islamic banking are fine. And so in this research, I'm going to provide some challenges as an academic, and then maybe if we have some time, I'll conclude with some remarks as a former practitioner in Islamic equity finance. So let's begin then with issues relating with the problems associated with monetary performance. And we're going to look at the US dollar as a store of value, first of all. Of course, if money does not fulfill its store of value function of money, it's not a very good medium of exchange. And because the US dollar is now backed by debt, hence the relevance to analyze the impact of debt and interest on the US economy. And also evaluate the contribution of debt-based, particularly debt-based financial products of Islamic financial institutions in the United States. So in terms of monetary performance of the US dollar over the long term, from 1792 to 2023, the US dollar was worth and defined as $19.39 per ounce in 1792, and today it's worth $2,600 per ounce. So the value of the dollar has fallen from $1 in 1792 to less than 1 cent today. And most of that devaluation has occurred during the fiat standard. And that represents a catastrophic loss of value, not only for the international reserve currency, but also for Americans. And because it's a debt-based currency now, we also need to look at the projections of debt and interest from 2024 over the next 10 years, with published data from the US government. The US national debt now stands at $35 trillion. And Americans have to pay over $1 trillion a year now to maintain that. And really, that's on an unsustainable trajectory. Probably in our lifetimes, we're going to see a calamitous change. The very next financial crisis is going to change a lot of things for all of us. And finally, because Islamic banks are producing debt-based products, then we need to reevaluate that, particularly in the US economy, which doesn't recognize the Sharia. So in terms of prior literature on monetary performance, Roy Jastrom also looked at or investigated the performance of the US dollar over the long term, but he assumed that gold was actually a hedge against deflation. And he couldn't really have foreseen, because of the when he actually wrote the book, he couldn't really have foreseen the highly inflationary period during the fiat standard. I also developed an Islamic monetary theory of value, which simply states the decline in the value of money, as expressed in a higher price of gold, as reflected in the increase of money supply in relation to demand, the effect of which would be higher prices. So under the fiat standard, I found that the cause, a reduction in the value of money, the effect resulted in high prices. And the other way around, if you had a high value currency, you had low prices. And obviously, there's a lot of literature on debt-based interest, imagining that our contemporary modern economy can only work efficiently on the back of debt transaction priced interest. In terms of the contribution of Islamic banks, there are a lot of sources on this, and I've just listed up the primary stakeholders, the primary institutions there. But just simply to say that there are only 3 products that all of these institutions are offering: Ijara wa Iqtina, Murabaha, asset financing, or Musharaka Busanakisa. And we're going to have a closer look at these later on. And in terms of methodology, I constructed indices from a full population of the price of gold and wholesale commodity prices from 1792 to 2023 in order to determine the value of money, the purchasing power of gold, the purchasing power of money, and real prices expressed in gold, again, with the aim of trying to evaluate the store of value function of money expressed in the US dollars. And in terms of analysis on economic projections, we have published data from the CBO and the Federal Reserve in order to examine more closely the impact of all of that on the US economy. And then finally, we have published data from the OCC as the regulator on the Islamic banks and their products as to whether they're generally offering Islamic financial alternatives, or whether they're just simply replicating their conventional counterparts. Now, in order to fully appreciate this long-term data, which I'll get to, it's also worthwhile just sort of refreshing our memory, and I'm sure that many of you are familiar with it, just refreshing our memory a little bit as to the history of the United States, whose origins, of course, started the history of the United States in terms of New England, and the attitude towards banking and usury has its origins in England. And here you see a nice little cartoon published in 1634. That's 14 years after the Pilgrim Fathers left Plymouth in England to establish the Plymouth colony in 1620. But whether they were Puritans or whether they were Catholics, basically the attitude of the English at the time was very anti-banking, very anti-usury. And this cartoon, you can see the little goldsmith banker sitting at his bench. And you could probably notice the little shaitan, the little devil, sitting on the shoulder of this banker. And the bench, by the way, in Latin is referred to as banco. That's where we get the English word bank. And when the English villagers had had enough of this guy's usurious transactions, they would break his bench and throw him out of town. And in Latin, that's called raptura. So banco raptura, or the modern English word bankrupt, initially meant a failed banker. Now is meant for any insolvent corporation. But this attitude continued, in the colonies, and then when of course the Americans got rid of the British in 1776, the attitude continued into the 1800s, well into the 1800s. And let's start with Thomas Jefferson, the third president of the United States, who in 1813 said that the unlimited emission of bank paper, we might call that today quantitative easing, has carried England rapidly into bankruptcy, as it did France, as it did us. And in 1816, he wrote, and I sincerely believe with you that banking establishments are more dangerous than standing armies. These presidents were less fearful of the British Army and more fearful of banking and banks. Andrew Jackson, previously General Jackson, who fought off the British in the Battle of New Orleans in 1815, the second attempt by the British to reacquire their American colonies. Interestingly, he arrested Nicholas Biddle, the president of the Bank of the United States, the central bank that existed at the time. He arrested him and threw him into prison, and he closed down the central bank in the bank war. So you can see that the history of the United States was an anti-REBA, an anti-banking economy. Today, it's a little different. But interestingly, it's not just the presidents, also in the media. And in this next interesting slide we have in the 1890s, published in 1894 in the Chicago Daily News, everyone knew who the real problem was. Everyone knew, and you can see this nice little figure of the Rothschilds banking family operating out of London, England, and referred to as the English octopus, with all of their debt tentacles reaching all around the world into all countries. And of course, this is what the presidents of the United States, and this is what the media, and this is what the people were fighting against. In fact, I would say that the 1776 War of Independence was really about opposing all of this, more than, trying to get rid of a king. And because Rothschilds particularly were very successful in the 1800s at lending paper at interest and demanding payments in gold. And this is what everybody objected to. This is what the Americans objected to. So let's get to the data. And so here we have this long-term full population set of from 1792 to today. The top line is the price of gold. The second red line is prices, nominal prices. The blue line is the purchasing power of gold, which you can see is very stable over the long term. And the bottom line, which is the really damaging one, is the purchasing power of the US dollar. So in the American economy from 1792 all the way up to 1971, the medium of exchange was stable because it was gold or silver. And after 1701, because of the collapse of the Bretton Woods system, the US dollar was no longer backed by gold, it was backed by debt, as we shall see shortly. So this collapse is what I was referring to earlier. As the value of money collapses, it affects the ability of the currency to purchase things at any particular point in time. So this collapse in the purchasing power of money is very revealing. One picture is 1,000 words. And from just seeing this, we can already see that the US dollar today is in deep, deep trouble, just like every other fiat currency. Now, what would have happened if we corrected the value of money? What would have prices look like all the way up to today? And the next slide reveals that. And we can see again, the blue line is the purchasing power of gold, the inverse of which is prices expressed in gold. And we can see that it revolves around a long-term secular trend that is constant. And I think this is a very strong argument for those practitioners who are talking about monetary reform to get back, perhaps using modern technology with cryptocurrencies front end, and then being backed by gold or silver as a hedge against inflation, because it's cause and effect. There's no compulsion in religion, there's no compulsion in the medium of exchange, but if you choose something other than gold and silver, it would seem, the effect is which you're going to lose your store of value. So, and that includes Bitcoin, and that includes anything else that man has chosen to use. So the issue of, and I've referred to this a couple of times now, that the US dollar is a debt-based currency. We can see this and analyze this very briefly in terms of the monetary balance sheet of the United States as of November 2023. You can see here that in terms of the, let's see if I can just sort of move this. Oh, sorry, there we go. So in terms of, yeah, I'm sorry, I think I missed that slide. So this was now expressing the value of money in terms of in terms of correcting the loss of value. So these are what prices would have been, as I mentioned earlier. And so this is clear evidence that we should try to, in terms of monetary reform, maybe look at blockchain front end and then use a gold as a store of value, a back end, audited, allocated gold. In terms of the monetary balance sheet of the US dollar, we can see that on the liability side, we've got Federal Reserve notes and bank deposits, which are totaling up to the broad money supply of M3, which is $21 trillion. And then that is equaled by, on the asset side, gold, a little bit of gold, but the most of it is the assets of the banking system, which is a little over 20 trillion. So when the United States started, it had a gold or silver commodity standard and a gold standard. But today, we're where 100% of the medium of exchange was in precious metals. And now we've got 97% of the US dollar is backed by debt. So in fact, this fiat money more correctly should be described as debt organized into currency. And it's a debt-backed currency. As not just the US dollar, but every other fiat currency is exactly the same. So when we think about the impact of that, since it's a debt-based currency, we now realize that in terms of the CBO data, the US national debt was $406 billion in 1971. It was now 33 trillion by the end of last year. Actually, this year it's 35 trillion. And with GDP at a little over 27 trillion, the debt to GDP ratio is 120%. In terms of a more incisive analysis from the CBO data, tax revenues, that's your income tax revenues, are projected to be $3 trillion higher than revenues this year, as of today. And interest expenses are expected to be, this is the government's data, $4.2 trillion higher than today. So with expenditures rising faster than revenues, the CBO projects continued deficits up until 2034 for the next 10 years, all of which will be financed by increased borrowings. And the national debt is projected to increase from 27 trillion from last year, it's already 35 this year, and it's projected to be 51 trillion by 2034. What is the impact of this in terms of the interest? Well, interest is expected to increase from 659 billion last year to 1.1 trillion this year, and it's expected to be 1.7 trillion in 10 years' time. To put that into perspective, the interest outlays already this year of 892 billion for the first time in US history exceed the US defense budget. And by the way, when we talk about revenues, I mentioned income tax. Whenever you establish a central bank, when the English established the Bank of England in 1694, when the Federal Reserve was established in 1913, both of these are private central banks. The Rothschilds is the private central bank, so the Federal Reserve is controlled by Rothschilds still. And when it was established in 1913, they also had to set up an income tax act. So before 1913 in the United States, there was no central bank. there was gold and silver money, and there was no income tax. After 1913, you had paper and plastic, and you had a lot of debt, and the rest is history, as they say. So really, this is not sustainable. Every single cent of your income tax is going to pay interest on the national debt. We think that income tax is there to build roads or lighting or something useful. No, everything is going to pay on interest. So if you had no central bank, you would have no national debt, no interest, and no income tax. And you might think, hooray, that's exactly what we started off with in the United States and in England. So I'm sorry, guys, you won your independence in 1776, but I argue you lost it again in 1913 to the English. Speaking of the Bank of England, if we're going to now look at the Islamic banking in the United States, we have to remember that the Bank of England was established in 1694, and all banks around the world, conventional or Islamic, have copied their business model. And when William Paterson, the first governor of the Bank of England, received his charter from the king at the time, his opening speech, he said, "The bank has the benefit of interest on all money which it creates out of nothing," which is a little astonishing. And then the Bank of England's Monetary Policy Committee published an admission in 2014 that whenever a bank makes a loan, it simultaneously creates a matching deposit in the borrower's bank account, thereby creating new money. So it's lending that creates deposits, not the other way around. And so when we get on to the OCC, of course, they have stipulated that Islamic banking and their products have to follow their guidelines. And indeed, there have only been 3 that have been approved by the OCC and the Department of Revenue. Just give me a few minutes, dear brother. Let's begin with Ijara wa Iqtina. In 1997, the United Bank of Kuwait applied in 1997, the UBK applied for the net lease, and the OCC noted the presence of interest. And I'm quoting, "UBK will add its margin to its cost of funds at the beginning of the lease. The London interbank offering rate will be used to determine the UBK's cost of funds. UBK will allocate these lease payments to mirror the principal and interest breakdown of a conventional mortgage. UBK will function like a riskless principal. It will assume no greater risk than it already assumes." Approved. Approved because UBK's application involved a conventional, interest-based financial lease with UBK operating as a riskless principal, exactly in conformance with the American usury laws. When it comes to Murabaha, we heard a lot about Murabaha being a dominant mode of financing for Islamic banks. Again, in 1999, OCC received the application from UBK, and the OCC said, well, look, we don't have any Sharia on our books. We're going to look at substance over form, which is actually quite Islamic in terms of appraisal. And they said that UBK will add its margin to its cost of funds to calculate the Murabaha profit. LIBOR will be used to determine the UBK's cost of funds. And in all cases, the amount of the Murabaha profit will be calculated to comply with applicable usury laws. So far, Ijara wa Iqtina, Murabaha, they applied, and that's the banks, knowing full well, because they had to be completely transparent in front of the American regulators, that they were basing it on an interest rate. So it's a little bit hard to accept because they're telling us that it's halal and is Islamic when they know that their application was an interest-based product. Murabaha, by the way, the classical scholars in Islam would talk about Murabaha a lot. It just simply meant that a merchant would disclose to his buyer the markup on the basis of market risk. But the Islamic banks have converted that into a debt-based markup, halas, and no market risk in all cases, in all products. And the same thing with Musharaka Mutanakissa. In this case, we have two documents which reveal precisely the pricing involved, the Department of Revenues and also the US Patent Office. In the Department of Revenue, they notice that the profit payment is the monetary equivalent of the interest portion. The acquisition payment is stimulating the principal amortization under a traditional mortgage. And in the US patent application, guidance is not a Islamic bank, it's a finance company, but they had nonetheless to be completely transparent and how they were designing the technology to receive online applications, and they had to be very transparent. And in that patent document, it says that the monthly payment is based upon a price set by the secondary market. That's another interest-based issue. And payments were made by the consumers with a conventional mortgage, and a formula can be used to calculate the monthly payment. That formula was a balanced financing calculation derived from a constant rate loan amortization. So in all three cases, the applicants knew they were providing a debt-based, interest-based, risk-free product. And they had to do it, otherwise it wouldn't get approved. And that's the irony with the United States. When it started, there was a banking-free, riba-free economy. Today, it's only banking, or it's only a riba or a usury environment that's acceptable. So to conclude, and I missed a couple of slides, but here we go. So in terms of the conclusion, the United States has lost 99% of its value since it started. The monetary balance sheet of the US dollar reveals that it's 97% backed by debt. In terms of the implication of debt and interest on the US economy, it's 120% already, debt to GDP, and the interest is going to exceed tax revenues by 2034. What that means to the United States dollar, Allahu Alam. But for sure, if the international community thinks that the US cannot pay its coupon payments on its treasury securities, we can see that there's going to be another financial crisis. It's like you and I being unwilling to pay the interest on our bank loan. What do you think the bank's going to do? It's going to foreclose. And then finally, we know now the truth in terms of substance over form from the OCC publications that all of the Islamic products that are being offered in the United States are interest-based, debt-based, risk-free. And Prof. Kabir mentioned an important point earlier about how do we determine what is a valid Islamic transaction. Well, the classical scholars talked about this a lot, and they said that any increase without awad is riba. And for them, awad meant the components of awad, or counter value, meant ghunam, market risk, qasb, striving for earnings, and daman, including milkiya, ownership. And usually, all of these Islamic banking products fail with a lack of market risk. And that's a good litmus test to determine, if you're being confronted with a modern mode of finance, whether it's really Islamic or not. Does the investor, or the creditor in this case, the lender, is it accepting the market risk of the borrower? And just like a conventional loan, the answer is no. Unfortunately, this is exactly what the Prophet foretold as one of the minor signs before the Day of Judgment. As he said, a time is certainly coming unto mankind when they legalize riba under the name of buy. There are two ways to generate riba. You either just lend it at interest, just like the English did in the medieval times, intereste, usura, or you buy and sell assets simultaneously for a markup, and where there's no market risk. Islamic finance requires there to be market risk. If there's no market risk, and if there's a profit involved, it's not halal. It's not riba, it's riba. And if I can just share, I'm sorry for all of those that that were wedded towards Islamic banking in the audience, but I'm afraid we have to challenge this because we can't go around declaring what is haram to be halal. Surah At-Tawbah reminds us what Allah viewed of previous religious scholars for the Christians and the Jews when they did that, in terms of haram, declaring what was haram to be halal or halal to be haram. And he viewed it as shirk al-akbar. Right, so we have to be very, very careful. We're living in a very dangerous time. We have to be very careful of the fatwa that we're giving and are receiving. And we have to do, all of us individually, fiqh muamalat is fara'ain, not fara kifaya. We all have to become experts, as Dr. Mines said on his opening speech. We all have to be, we are obliged to do our own due diligence. We can't just point at somebody else, said, you know, I didn't know, but I just followed my ustaz. That's, you know, ignorance is not a defense on the Day of Judgment. We're going to get a shock when Allah subhanahu wa ta'ala tells us, no, he gave a wrong fatwa, and you just blindly followed him, taqlid. So all of us will be in trouble if we did that. That's the academic presentation. I just wanted to back that up because my own experience formerly in Islamic finance as a practitioner was not in Islamic banking, but as Prof. Kabir was also indicating, I found enormous reward and success, personal reward and success in getting engaged in Islamic equity finance, mudaraba and musharaka. And I did that in a Muslim minority country 20 years ago in Singapore. I thought I was going to get blown away by the Singaporean banks, but they weren't interested because I was dealing with poor entrepreneurs using mudaraba. And I found that actually I was dealing in an uncontested market with a lot of demand from, you know, for these products, mudaraba and musharaka, and there's a lot of hikmah behind it. And, you know, instead of earning a haram 4% on my deposit account, I put the money into mudaraba and musharaka investees and was generating a 20% return on investment. Now, I think for all of us, investors and investees, we should realize there is an alternative. And not only from a Sharia point of view, the West has its partnership law too. Where did they get that from? They got it from the Torah and the Injil. And it's easy to explain what a limited partner is and what a general partner is to them. To us, it's the Rab Amal and, you know, Mudarab. So the ability to communicate with Jews and Christians in that environment is very easy, actually, as I found. Because that's what the whole world was doing before banks turned up in 1694. What was mankind doing? Well, they were using gold and silver as money, for sure, but they were also using partnership finance. In the medieval ages, the commender partnership is the mudaraba, and the societas partnership was the musharaka. And so there's a lot of common grounds, a lot of common understanding in all of that. And just finally to conclude, for those that are still sort of hanging on to the idea of interest-based finance, even Keynes, in his general theory in 1936, said that interest holds back production. Interest sets a cap on employment. So actually, the problem with Keynes is he never took that to its logical conclusion. If you're really going to maximize GDP and if you're really going to generate a full employment economy, then the interest rate should be 0. Thank you very much for listening. Assalamu alaikum wa rahmatullahi wa barakatuh.